Welcome to the NSCHBC Edge Podcast, leading the way in the business of medicine. Now here's your host, Terry Fletcher.
Hello, everyone, and welcome to the NSCHBC Edge Podcast. I'm your host, Terry Fletcher. The Edge Podcast is brought to you today by the National Society of Certified Healthcare Business Consultants. Our goal is to discuss healthy business principles, have conversations on the business side of medicine so that you and your practice can thrive, be profitable, and successful for years to come. My expertise as in the medical field is focused on coding, billing, reimbursement, auditing, and basically the entire revenue cycle management. But the business side of medicine is also about legal issues in healthcare, regulatory restrictions and flexibilities, especially during the pandemic, practice management, and of course, financial and accounting end of the medical and or dental practices. So with that in mind today, the topic will be focused on provider relief funding and all of the money that's been pushed out over the past year during this COVID-19 pandemic to help assist physicians and hospitals stay afloat during this time. My guest today to talk about this with me and all the provider relief information is Christopher Hundt. He's a healthcare CPA and fellow member of the NSCHBC. Chris is a healthcare business consultant with Riemann Healthcare Management Advisors Group. Chris provides business management, consulting, tax planning, and tax preparation services to physicians and dentists and their practices. He is also a member of the firm's Healthcare Leadership Group, working with industry specialists from around the firm to share best practices and develop proactive ideas. Prior to joining Riemann, Chris served as an Assistant Auditor General for the state of Michigan. We're so happy to have this subject matter expert today with us. Chris, welcome to the podcast.
Terry, thank you very much. Happy to be here, and I couldn't have said any of that better myself, so thank you.
Isn't it funny when we get the rundown about ourselves, we're like, okay, just keep going. Let's move on. I know. I get that when I present too, and it's just like, oh my goodness. So our conversation today, I know some people will think, oh, provider relief funding, but for us, it's almost like we're kind of nerdy with it because there's just so much to know and understand. And now it's about reporting it correctly now that we're into tax season. And I think we're really kind of finding the endemic, if you will. And I don't see that there's going to be any more funding, but I could be wrong. You'd probably be able to speak better to that. But let me start with this. Can you basically give the difference as far as some of the funding, the HHS, and some of the different things that the physicians were allowed to get that they were the guise of loans, but actually they should be forgiven, correct?
Yeah, so I think if we go back to the very beginning, HHS was something that actually came out really early, like in April of 2020, right after the pandemic started. And that was money that was basically just dropped into the account of many of our clients. If they billed Medicare. Initially, what HHS was for was those clients that billed Medicare. So a lot of our physician clients received it. And then HHS kind of, I don't know, they realized they still had more money left in the trough. And so then they opened it up later to others that don't bill Medicare. Maybe they bill Medicaid, maybe they're dental offices, maybe they are pharmacies. So they opened it up in phase 3 and phase 4 for others to apply. Phase 1 and 2 was really strange because it just basically got dropped in their account. Clients emailed us one morning and they were like, hey, I just got $100,000 from HHS plopped into my account.
I got the
and
same
nobody knew really what it was. Honestly, we didn't even really know what it was. And HHS, after that, they started to put out some more information about what it was and terms and conditions and everything like that. So HHS was one of the first things. And then PPP loans, that was another big one.
Right.
PPP loans, obviously, were to cover payroll-related costs. And those were loans that ended up being forgiven as long as you were able to use the funds the way that you were supposed to use it to cover payroll-related expenses. So, and the best thing about that, HHS funding was taxable income. PPP loans, when they were forgiven, were not taxable income.
Actually, that's an interesting point because I didn't know that on the taxable income. So let me ask you a question. On the HHS funds, when they were dropped in, this was not a choice by a provider, right? It was basically if they billed Medicare, they were getting the money whether they asked for it or not?
It was a choice in the fact that you could either attest to it, saying that you wanted to keep the money, or you could actually give it back. But the initial drop in of money It was based on, I think, 2018 Medicare billings.
Okay.
And so you were supposed to get, I think, 2% of those Medicare billings. And so that was phase one. And then phase two was if maybe you didn't receive the full 2% that you should have gotten, then they gave you an additional amount to get you up to that 2% of your revenue. And then phase three and phase four were the same thing, supposed to be 2% of your revenue, but were opened up to more people. But yes, HHS money is taxable income.
Oh, wow.
But the PPP loans, once they were forgiven, they converted to being non-taxable income.
So what's interesting about this, because and then I know my brother, he's a realtor, and then he applied for this EIDL, Economic Injury Disaster Loan, through the SBA, and I think he got like $10,000, and he said that was also forgiven.
Yep, but let's be careful because I think they're two different things. So what you're referring to is an EIDL grant.
Okay.
And that was up to $10,000 depending on how many employees you had. And initially when that came out, that was confusing too because they were going to reduce the amount of the EIDL grant that you received from your PPP loan forgiveness. So everybody was going to have some portion that they would actually have to pay back. They decided to change those rules and allow you to have your PPP loan fully forgiven, plus get the full $10,000 grant, up to $10,000 grant. EIDL loan is something else, and it was an actual loan through the SBA, similar to SBA loans in the past. It just had a streamlined process.
Okay.
We actually steered everyone away from any EIDL loans unless they absolutely needed additional money. And the reason being, the biggest reason for me is I work with a lot of S corporations, and a lot of S corporation owners take distributions from their business. Well, if you sign up,
that's exactly what I do.
Yep. And if you signed up for this EIDL loan, you actually had to get SBA approval in order to take distributions from your business. It was very strict rules with this EIDL loan.
Okay.
So I steered people away from that. So EIDL grant to me is the $10,000 that was non-taxable. EIDL loan is an actual loan that would need to be paid back.
Okay. Well, I appreciate the clarification because that definitely, well, and I was surprised because, and not to kind of throw my brother out there, but basically when I said, I go, yeah, but you're a 1099 person. You're not a corporation or anything. He goes, they opened it up for something a little different. And I was just like, so question here, and this is where I think there's a lot of confusion, is just talking about those three entities. As far as HHS, provider relief, PPP, and, for those that I steered away, people also from the EIDL. But what about the crossover? Because wasn't the HHS supposed to be for COVID expenses or COVID losses, and then the PPP was for payroll during this? So I guess in my mind, I was trying to figure out how, and since we're talking healthcare, how physicians and dentists were able to separate the two, because it seemed like there was a lot of overlap.
There is a lot of overlap in the eligible expenses for these things. So with HHS funding, let's start with that first. There was a listing of expenses that were allowed. So HHS funding is not forgiven. You just have to report how you used the money, whether it was to cover increased expenses specifically related to COVID or whether it was to cover lost revenues. One of the expense categories that is allowed in HHS is payroll. However, you used payroll for your PPP loans.
Exactly. So this is where I'm like, wait, what?
So you cannot double dip.
Right.
And another thing we'll talk about in a second is employee retention credit. That was also payroll related, and you can't double dip, you can't triple dip with that. So you do need to make sure that you are not using payroll related expenses for both HHS funding, PPP loans, and ERC. It can't be for the same time period. With HHS, though, what I found for a lot of my clients, most of my clients are in Michigan, and Michigan had one of the longest shutdown periods in the country. And so second quarter for most of my clients was a significant revenue decline. And so when HHS first came out, we weren't 100% certain how they were going to deal with this decline in revenue. the way I thought it was going to be is you kind of looked at an annual basis and you said, okay, in 2020 compared to 2019, my total revenue declined by X. And a lot of our clients did better in third quarter and fourth quarter 2020 because they were catching up for the decline of the number of patients that they saw in the second quarter. So when you looked at it on an annual basis, some of my clients may have actually done a little bit better or at least broken even so they wouldn't have this significant revenue decline that they needed for Hhs funding. But then they changed the rules right before period one reporting, and they were only going to look at the quarters in which you had losses. And they were not going to net the quarters in which you had gains in income. So all of my clients were pretty much eligible just based on lost revenues. So what I've been doing for my Hhs reporting is I haven't been reporting anything for expenses. And the reason I've been doing that is because it was pretty clear that the expenses had to be incremental expenses specifically related to COVID.
Right.
So, for example, one of the items that you could use as an expense is rent. Well, not all of your rent can be used for Hhs funding. It would be if, like, let's say you had to lease additional space next to you to comply with social distancing guidelines.
Okay.
That would be an additional expense specifically related to COVID, but your rent for that whole time period doesn't count as a COVID-related expense. The same thing with payroll. If you had to hire additional people, then that additional expense could be a COVID-specific expense, but not all of your payroll. So I just said, if you can meet the amount that you received in Hhs money, if you can support it with lost revenues, let's not even worry about expenses, because it was harder and harder to actually identify what your true COVID-specific expenses were.
And that's what I was wondering. So are they comparing their lost revenues from a previous year when they're, pre-COVID? Is that how they're looking at the losses?
They're actually looking at, on a quarter-by-quarter basis, 2019 is the baseline year. So you would compare first quarter 2020 to first quarter 2019. If you had a loss, it counts as lost revenue. If you had a gain, it counts as zero. Then you'd look at quarter two 2020 compared back to 2019. And that, like what I was saying, is the quarter in which most people had their biggest losses. And you do the same thing for every quarter in 2020 comparing to 2019, and every quarter in 2021 comparing to 2019. And when you go through that process, I think most of us in healthcare will realize that a lot of our clients had a decrease in revenue.
Right.
That can cover the Hhs money.
So there was another source of, I hate to call it income, because for me, I discouraged this. I almost was a dog with a bone with it. I was just like, please do not do this to my clients. And that was the advance and accelerated payments from Medicare. And now I'm seeing on a lot of the different, like Becker's Health and things, where the hospital associations are like, oh, can you forgive these or can you delay these? That was specifically a loan against future payments. And I said, believe me, this is not going to be forgiven because Medicare can't afford to forgive it. Right. It's based on future payments. And I don't know, did you also discourage that with your clients?
I did. I discouraged it. I only had a couple. So most of my client base is mostly in dentistry. I would say I'm probably about 95% dentistry. I've got a few vet offices, which none of this really applies to.
Okay.
Except for potentially the PPP stuff. And then I have a few medical practices. So I did have one that received the money. I talked to them about it. I asked them, just give it back, because to me, it was like, if they're gonna reduce future Medicare payments, it's going to be from a billing perspective and a reconciliation perspective. It's going to be a nightmare, because who is it coming from, and how do you reconcile that with the patients? And maybe I'm not smart enough to figure that out. They kept it, and they've been tracking it, and it's been reducing their future Medicare payments. But I did discourage it with clients as well.
Yeah, I did too, because now because they started getting it back now, because it's now the time frame. And my hospital and physician clients are like, how can I stop this? And I said, let's go back to a conversation about 18 months ago, where I said, do not do this. You've
Right.
got HHS funding, you've got PPP, you've got so many other options that you can apply for. This is not one that you want to do. And they're like, okay, but we just assumed that. When I'm like, you know what, you need to move on because you and I are not going to have a good conversation on this one.
Right.
So definitely interesting. So now let me ask you a question.
Mm-hmm.
I noticed that so you talked about the first and second, I hate to call it kind of a dump in, but basically the first and second offering, I guess they put in to the different providers' accounts. And when it came to the third and fourth, you had to apply for those specifically, correct?
Yes, that is correct.
Okay,
Yep.
so I did hear that there were some physicians, and I even had some clients inquire about it, that some of the providers were basically applying for it for a rainy day. And so they were applying for it, getting it, and then putting it aside in case they needed it. Can you speak to that? I don't think that's compliant.
It's they will not, if that's what they did with it, they'll have to give the money back. Technically, for the third draw, the one that you had to apply for, the limitations, there were not many limitations in who could apply for it. Basically, you build Medicare, you build Medicaid, you were a dental practitioner, you're still in business. There's a couple other things, but I don't remember there being a significant decline in revenue. I think you may have had to attest that you did have a decline in revenue, but here's the thing. At the end of the game, when you report, if you don't have enough lost revenues to cover the money that you received or expenses, then you have to give the money back. So legally speaking, I'm not an attorney. From a legal perspective, I don't know if there was anything illegal with that, but I did have a ton of conversations with people about whether or not they actually needed the money.
Me too.
And need is very hard, especially at the time, because you had no idea if there was going to be another shutdown. Michigan has been kind of crazy throughout this whole process with the masking and the shutdowns and the threat of shutdowns. And so it was really hard because I think you had to apply for that like in June, and I think they may have received the third round like in July and August.
Right.
And so at that point in time, we were still coming back from the pandemic. I mean, everyone's still kind of recovering from it, but nobody really knew what was going to happen, if there was going to be any future shutdowns.
Yeah, we
So
have
I
the
had
same thing here in California, except California, I don't know if you know, we're a little different animal out here, where even if the governor tells us to do something, we don't do it. So even though it's out there saying you have to do it, it's almost like we also have two different states, because what they do in Los Angeles versus the mid central California, and then what they do in Northern California, like San Francisco area, is completely different. Everybody kind of says, okay, yeah, whatever, we're going to do our own thing. So it's not, even though we do have mandates and we do have things that happen, if you drove here, you would think that the whole state's open.
Yeah.
So it's a lot different.
Yeah. So back to the requirements for third, I actually just pulled it up because I couldn't remember all of them off the top of my head, but either build Medicaid or Medicare, be a licensed dental service provider, must have billed Medicare fee-for-service during a certain time period, Medicare Part A provider, behavioral health, and you must have received a targeted distribution payment.
Okay.
Or that was one of the things. Any of those things could make it so that you're eligible for this third thing. And then you must have filed a tax return. You must have provided patient care. So I don't remember there really being you had to say, okay, I had a 25% decline in revenue like you had to do with PPP2. I think that whether they took the money, I don't think it was necessarily illegal, but if they don't have expenses and revenue to support it, they will have to give it back. And HHS has made it very clear. We're in the second round of reporting. So those people that received that first and second round of money have already had to report. And if they haven't reported, they will be getting a letter from HHS asking for that money back. They've made it pretty clear on that.
And there's no wiggle room there. Basically, if you didn't report in the first round, you're given that money back.
That is what they are saying, yes.
Okay.
They're saying you're out of compliance with the terms and conditions and you must give them the money back.
And it's interesting because one other thing came up, and I don't know if you've run into this, probably you have with dentistry especially. I know I've run into it with the medical side, is that there was a new code created, and I know you're not a coder, but it was basically a submission code for an insurance company, 99072, that was for PPE, so that protective equipment. But then Medicare came out and a lot of the payers said, we're not paying for it because that was included in your Hhs funding that we gave you. So talk about a conflict in, what they're trying to tell people. So that was a big argument for people. Yeah. But the other thing I was going to ask you is that, I've had a lot of providers and physicians and hospitals and even a couple of dentists that have said, okay, is this under the CARES Act? Is this under a COVID relief bill? Is this under the Economic Aid Act? Are these all intertwined as far as the reporting requirements and where this funding comes from, Chris?
To be honest with you, there was like 4 of them, and I don't remember exactly what act it's under. The way that I remember it is the FFCRA came out first, and that had a lot of the stuff with PPP and EIDL and even some employee retention credit stuff. And then the other acts that came out after that either added to or changed some of the stuff in the original. Okay. So I don't remember exactly which act everything came out of, to be honest with you. There's been so many of them. And
there has.
I feel like I've used all my brain power on just some of the stuff that I know my clients need to be aware of. We did a lot in communication. I think our clients probably got a little bit annoyed with how much we communicated by email. But one of the things that we've done recently for all the other providers out there is we've been holding a lot of webinars where I send out a webinar invite instead of trying to have 150 different conversations. You kind of have it once, and then maybe people will call you with questions after the fact. But that's been really huge for me and another advisor in our office.
We've been doing the same thing because of telehealth and just having to deal with, the pivot to virtual care and making sure everybody's doing it correctly. And it's amazing how many people are not. But everybody's making assumptions. Well, I can do this because somebody told me that somebody told me that somebody said, and I'm like, you might want to get your COVID relief bill out, the CARES Act out, because I have to follow those things. And so there's a lot of details, legalities in there and under flexibilities. So
Terry, can I bring up one more thing, one more avenue for funds that many people I've noticed have actually not taken advantage of yet.
Absolutely.
And so if you haven't taken advantage of it, this would be the time. It's the employee retention credit. And what this was to, if you kept your employees on staff during the pandemic, and you continued to pay them, and you had a certain amount in decline in revenues, you were able to take a credit on against your 941 taxes for something called the employee retention credit. And so there was an employee retention credit in 2020, and then there was also an employee retention credit for the first 2 quarters of 2021. So 2020's employee retention credit, you had to either be shut down by state government or government order, and then any wages that you paid during that shutdown period would be eligible for this employee retention credit up to a certain amount per employee. And then after that, if you had a decline in revenue of greater than 50%, you would be eligible for that quarter in which you had that decline in revenue, plus the future quarters until your revenue got back to 80%. Oh, wow. So it ended up being, for a lot of our clients, second quarter and third quarter of 2020. And then they changed the rules and they made it actually a little bit easier to get the employee retention credit, and they increased the amount of the credit in 2020, the first 2 quarters of 2021, where you only had to have a 20% decline in revenue. But a lot of people in 2021 had made it back to at least normal revenue. So I had a lot of clients with 2020 employee retention credit, and then a lot fewer, maybe only 6 or 7 that were able to get it for 2021. But it was some significant dollar amounts. I mean, you're talking single practitioner dental offices, $20,000 to $30,000 of employee retention credit money.
Oh my goodness, that is huge.
And so we did have a lot of clients that referred new business to us, even if it was just for the employee retention credit, because we knew what we were doing, and we were able to take advantage of it for a lot of our clients.
So interesting question though. You've mentioned a couple of things where the rules keep changing. So how do you, as a healthcare CPA, how do you deal with that? I can't even imagine, I know that there's some, hopefully not very many, but there are some, practices that are small where they think I can't afford, a CPA, or I can't afford accountant. And I'm listening to everything that you're saying. And then the changes halfway through, or the changes before you report, how do you keep up with all that?
The change was crazy. If like I told you before we started the podcast, if you don't like change, it's a bad time to be a CPA when you're talking about potential tax reform, all of this stuff that happened over the last 2.5 years. To be honest, Raymond is a pretty large firm, and we have a very good group, not only on the healthcare side of things, but also our tax and advisory group. They did a phenomenal job of keeping everyone updated. But the NSCHBC, we have what's the word for it? The email listings.
Oh, our listserv.
Our listserv, and that was phenomenal.
It was, yes.
Providers throughout the entire country. Seemed like every time something changed, someone would put an email out there, and it was the most fantastic thing in the entire world. So that was one of the ways, but you just got to read articles. You got to stay up to date on things, and hope that what you're looking at is the most recent information. I always find myself, especially, with the HHS, they updated things so frequently that I always look at the bottom of the PDF and the date that it was last updated to make sure that I have the most recent one.
I have to do the same thing with my information. Yeah, we've had with the CARES Act and all the changes on the flexibilities, things they've added to the telehealth list, and things that they're not going to do for HIPAA and all that. When it first came out, it was 36 pages, and now it is 260 pages and has been updated 27 times.
Oh my gosh, yeah.
So it's like, oh my gosh. But you brought up a really good point. We talk about the National Society of Certified Healthcare Business Consultants. Chris is one of the certified consultants within our society, and it's phenomenal just for me as well, because again, I'm in coding, billing, reimbursement, revenue cycle management, auditing. You're in accounting and CPA and et cetera, and consulting. And we also have healthcare attorneys on this list in this organization, and other CPAs all over the country. And so it's been just a godsend to have just subject matter experts in all of this, and everybody, really collaboratively putting out a lot of the information. So for our listeners, if you want an organization that can help you, this is it. So
absolutely,
it's been definitely great. So as we wrap this up, what is a quick tip for planning for 2022 taxes? I know, I have my tax appointment tomorrow. It's kind of funny with my accountant. And so what would you tell clients right now as far as getting their ducks in a row, making sure for their 2021, tax year, what do they need to do to make sure that they're covered?
The biggest thing always for me is to get your information around timely. There's a lot of things that changed in 2021. Accountants and CPAs have a pretty tough task. We're actually still dealing with forms changing with the IRS in the state of Michigan. I don't know if it's every software, and I won't say what software we use, but a lot of our forms are not available yet. So getting things in timely, communicating with your advisor, your CPA, about any changes, filling out your tax organizers so that you are able to identify things that might be new or changed in your return. We didn't get tax reform at the end of last year like I thought we were going to. And I think that it's even less likely to happen now with elections coming up at the end of this year. So I think just staying on top of things, constant communication with your advisor, I think that's the biggest thing.
That's excellent advice. And also, one of the things that we try to do after the podcast is put up a brief article on some of the things that we've discussed, and it will have some links and sites to the HRSA.gov site on the fact sheet on how to make sure you're meeting those reporting periods and the deadlines and all of that. So we'll make sure we have that up on the NSCHBC website this week for everyone. So, Chris,
it is important to note really quickly that 3/31 is the ending of reporting period 2. So it's coming very, very fast.
Oh, wow.
And I've told all my clients that the earlier you can help get me the information or have us help you get the information for reporting, the better, because it is tax season as well. So there's a number of things that need to be done before April 15th, and HHS reporting should be near the top of the list, because if you don't report, you will have to return some of that money. So
yeah.
sorry to interrupt.
No, that's great information, because I think that people they let the time get away from them.
Yes.
and you can't do that. There are deadlines, there are times, and we'll try to make sure that you have those deadlines up on our website so that you don't forget. But the first one that opened, wasn't that opened in December, and then it closed? When did that open? I know they gave a grace period, the first reporting.
Yeah, we are in reporting period 2 that started January 1st, 2022 and goes until March 31st, 2022.
Okay.
Yep. Reporting period 1 was last year, and they did extend it 60 days. It was only supposed to be open for 3 months. They extended it 60 days because I think they realized the number of people that hadn't reported.
Yeah, everybody panicked. I was seeing all the posts about that. I was like, okay, are you not paying attention? I know, I was seeing that as well.
But do not rely on another 60-day extension.
Well, and I hear that they're understaffed too at the IRS or dealing with this and Hhs and wherever, whoever's policing this, I guess I should say. So
yeah,
definitely something to keep updated. Well, this has been just such great information and such great insight for our listeners and client base. And we really appreciate you coming here today, Chris, and talking to us. And I hope to have you back in the not too distant future. But I know your business is going to be ramping up now based on what's happening out there. So if anybody wants to get a hold of Chris, make sure that you go to the NSCHBC website, go to Find a Consultant, and then it'll give you a drop-down screen to type in his first name or his last name or both, and you can find Chris Hundt on our website. You can find any of our consultants on our website. So everyone, thank you for listening to the NSCHBC Edge Podcast. A reminder that we have our Telehealth Summit, which is our educational offering, February 24th and 5th. If you're listening to this podcast, you probably already attended, but we also will have that available in our members only section of the nschbc.org. So again, thank you for listening today. Everyone, make it a great day and a great week, and we appreciate you. Have a great day, everyone. And again, thank you for listening to the NSCHBC Edge Podcast.
Thank you for listening to the NSCHBC Edge Podcast. Join us on the second Tuesday of each month as our consultants tackle the complexities of navigating the business of medicine. You can reach us on the web at nschbc.org, the National Society of Certified Healthcare Business Consultants.